Hi traders and welcome to the technical analysis market wrap on the 9th of July. So we saw some fireworks last night before the New York Open. The market certainly started to move, and we know that the China markets have certainly had an influence on that, but it seemed to correct itself throughout the session. So we'll jump straight in and see if we can identify any opportunities in the current markets. So we'll look at the Aussie USD first. The daily chart on the Aussie looks pretty ominous, really. We can see that we've broken down to a lower high on the daily chart. So we've definitely got the sequence that we're always looking for in terms of the lightning bolt. And we can see that this big rejection candle came off the 20 moving average, and that level of basically what was support is now resistance at that 76. A very, very important candle and a big rejection. So I know a lot of you got that big move down, which is awesome. So that's what we're always looking out for, a retest of that zone from below it. It's certainly sold off quite heavily, and it has closed down below and made a new low. So really it's starting to look a little bit ominous now for the Aussie USD. And it's probably going to get close to the target that we've been aiming for a little while. So we'll pop a horizontal line there, and it's around that sort of 73.50 area. And the reason is, I mean, apart from the fact that we've got some resistance here, we can see that, and we've got support there. This is a daily chart, so this is about 3 weeks worth of action, as you can see, way back in basically November of 2020. But you really have to go to the bigger time frames to understand why this level is so important. So if we take it out to a weekly chart, you can see that although we had that area here where it was actually a bit of a problem, you can see that all the way through here we had, this is a weekly now, you've got a big resistance point here for about the best part of a month. You've got over here all these wick rejections. This is about 2 months worth of action, if you like. These are weekly candles, all of them rejecting off this level, and this is way back in 2018. So we know that this is a very, very important level for it, and it's not just going to go crashing through it without some sort of support there. So that's the logical target for it. It's certainly well on its way now that it's broken down on a lower low. We'll go to the smaller time frames, and you're looking for entry points effectively to just join the trend now and see if we can get it down. I mean, at the end of the day, it's sitting at 74. Yeah, just over 74.20 at the moment. We're not asking a hell of a lot. We're only asking 70 pips from it, so it hasn't got a long way to go. All it's got to do is break a couple of lows on the smaller time frames, continue the lightning bolts, and there's a good chance that it will get down to the level that we want. All right, the next one we'll have a look at is the US dollar CAD. The US dollar CAD's just doing the US dollar CAD thing now. Like, it's been very, very strong recently. We know that it came off. It's had a very, very strong week. It's come off the 20 moving average, and certainly went to the stars. It almost reached the 126 sort of 30-40 area that we were hoping it would get to. But look, we know that there's a lot of conjecture here as to whether it's actually going to go blasting through. So we don't expect that it's going to have an easy time here. And that's highlighted by the fact that we've got this big rejection candle already. So it certainly had a crack. I mean, it did get to 125.91, so it wasn't that far off the big long-term target that we set for it. So it's actually probably getting there a bit quicker than we probably thought anyway. But it's had the big rejection there. And look at this. You only have to look at this on a daily chart to know that this is a very, very strong channel-like area that was around for about 3 weeks. It went basically to 3/4 of that zone and then pulled back. So, where this one goes from here, I think it's probably a bit of a reload zone. It wouldn't surprise me to see it weaken a little bit and come back down and find a little bit of support here again at the, probably mid 124s, or maybe 124, even 80 area. But that's going to be really dependent on what the US does tonight, of course. I don't think we're going to get that action during the Asian session, so we'll just keep an eye on this one. But if it does start to track higher again and we get that lightning bolt effect on the smaller time frame, you would think that the easier trades are going to be long on this one, up to about the 126 probably in the first instance. But you can see we've got the moving average cross now. MACD signal line is well and truly inside the histogram, so still a lot going for it, and not really showing any signs of weakness. So I wouldn't be looking at shorting it, but just looking at the opportunities. If we get a series of higher highs and higher lows on a 1 hour or a 15-minute, you can probably scalp that trend. But I can't imagine we're going to get a lot of action throughout the day today, but maybe into New York tonight it might push into those 126s. Not keen on shorting it at all until we see a reversal on a smaller time frame. So until we see that, we're only taking longs on the US dollar CAD. So we'll move over to the US dollar yen. This one has shown weakness for the first time in quite a long time, actually. We know we've had a very, very strong daily move all the way up to this area. Although it's still in a technical uptrend, we haven't actually seen the downtrend lightning bolt yet. It's certainly setting itself up for one now. It's pulled up to that basically 109.80 area, which we know is very strong support. We know it was resistance right through here, and it was obviously resistance around this point here when it did break through. So it's a level that we know is going to give it trouble. If it breaks through here, I would be starting to get concerned for the US dollar yen. I haven't given up totally on it yet, but in saying that though, it's pulled back far too far to be getting excited about going long again until it actually does a decent reversal. When you see a big pullback like this on a daily, you wouldn't want to be taking just a 15-minute change of trend. You want to be looking for something a bit more substantial. Probably a 4-hour would be the ideal. You want to go to the 4-hour time frame. We know that we've got a very strong support zone here. We'd be looking for a series of higher highs and higher lows on the 4-hour, probably in the minimum time frame, before we start taking this long again. Only because we've had such a big drop on a major time frame that it needs to really convince us again that the momentum is with the buyers. So we want to see a lightning bolt on a 4-hour to basically determine if this is going long. Failing that, if it continues to fall and breaks through this level, then we can start looking at shorting to every level basically that provided problems all the way up is going to provide problems all the way down. So the next level that we can look at is the 109.30 level, which is the red line already highlighted. And if that one gets broken through, the 108.50 level is going to be the next point of support, and serious support at that too. So that's going to be a pretty serious support at 108.57. But it has to break through the key levels first. So 109.80 is a strong level. You can see that it's rejected off it. If it breaks below there and closes below there on a daily, then you can start looking for the shorts. Or if we get a 4-hour change of trend at the level that we're at, we can start taking it long again. And the logical point is going to be at this 110.50 area, back to where it was before the big break. Okay, we'll go over to the dollar index now. So the dollar index it's still shown a lot of strength. Like, it's not really, I'm not overly concerned by the weakness that we've got here. We know that it was at a pretty strong point of resistance when it did actually break through there. So it's no surprise to see it, make a new little mini high, even though it didn't close up there. It's come back and retested this zone. Still looking pretty strong for mine. It could come back to the 20 moving average. I'm not convinced it's going to. I think it might have too much strength for that. But if it is going to come back, that's the level it's going to come back to. Around this level here, around the one, probably 92 area would be a pretty sensible place for it to come back. The 20 moving average will start to catch up shortly. And if it finds support on the 20 moving average, you can probably expect some sort of a bounce up. So not a bad trade. I don't think that it's really, well, it's not a trade in its own right, but if we look at the euro in a second, we'll know why this market action is important, because the euro is at a very key point of where it needs to go to next. So looking at that, it's still looking pretty strong, even though we've had a little bit of a weak day. I think that it's probably going to hold above the 92, probably at worst. If it breaks through the 92, then we're going to start looking for shorts, but it needs to get down there and close it. And that's still a bit away. We can see here that the 92 level is around the crosshair level, and the 20 moving average should support it at that point. We'll go straight into the euro. The euro's been, obviously weak. You can see here that we've been selling off that 122.50 area. This is a daily chart, so you can see that we've been short ever since then. We identified the weakness and it hasn't let us down. We've still got the lightning bolts happening, which is great. We know that we've got weakness throughout this. Similar to the Aussie in a sense, although it had a bit of a pullback today. You expect that. You don't want just red candles. You want the market to behave itself in a manner where you can actually trade it. So for me, we've got the moving average crossover, as you know. We've got MACD still falling, which is fine. We've got at a level of support here, and well, it's resistance now, but it was support at this point here, and it was resistance through here. So it's probably not a bad place for it to reverse. So what you're going to be looking for there is a couple of smaller time frames. You can see that the 1 hour is starting to go a little bit sideways. What we want to see is a lightning bolt effect, so a series of lower highs and lower lows on the 1 hour. And if we get that, we can start looking at those shorting opportunities down to, in the first instance, probably 117. I think 117 is a logical target for this. If we put the horizontal line on that, you can see that was obviously very strong support at this level here. It halted a very strong downtrend, and although it may not hold the downtrend altogether, it's certainly going to pull it up at some point. So you'd think if it was going to gravitate down there, this is the level where you take profits are going to be. You're talking about effectively 140 points from where it is now, probably 20 points less by the time you get into the trade, but that is the very clear target. Failing that, look, it's looking very short. If you want to take a long scalp or a counter trend up, you're going to have to wait for the same thing, really, a lightning bolt on the way up on the smaller time frame. So if we get a very strong lightning bolt, and this may happen, like you can see here, the price is being strong on the 1 hour. If we get a close above this level here, it needs to clear all this area for mine. It needs to get past all that and prove. You can see here it's a pretty congested area with support and resistance, so it has to break that role reversal zone, but a break above here, above the 119, could convince me that it's going along again, and the logical target there will be 120, because it will gravitate to these key zones. The 120 will be one of those zones, which is around the level here, okay, which will be also the 200 moving average by then, or the 117. I think good trading on the euro. You've got options everywhere there. All right, we'll have a quick look at the S&P 500. This one has been basically a bit of a powerhouse all the way through. The first sign that it was showing very big weakness was before the New York Open last night. It basically sat on the 20 moving average. Once again, the 20 has held it up, and at its worst, it was down at around the 42.80 area. So I mean, it's recovered about 30 points, which is reasonable, but it is still a bit of a negative candle, no question about that. It's still well and truly off its highs, which it reached throughout that period, and that was 43.60. So it's still well off its high. And a bit of that had to do with the Chinese stocks meltdown. I've got to be a little bit careful of this one. You know my thoughts on it. I'm not keen on trading it either way until it actually breaks a key zone properly. I still want it down at around that 42.30 in the first instance, really, to be taking this seriously for a long. Or if it breaks that level, looking for shorting opportunities down to the 41.30, which are the two key levels. Until it does that, I'm only going to just watch and see on this one. It's always interesting to check out, but at the moment, the 20 moving average is doing its job, and it's certainly propping it up and keeping it very, very strong in this area here. So until that's broken on the way down, I'm not interested in shorting. And when I say broken, I mean a daily break below it to close. It's got to close below it, obviously, not just breach it. It has to close below. Or indeed, if it breaks above the 43.60, but that is definitely not my preferred trade because this has not pulled back properly yet. All right, the last one we'll look at is gold. I know gold is interesting a lot of people. So we saw the big sell-off. As we know, it's found the support where we hoped it would, which is around that sort of 1765 area. There's very, very strong support there, and it's been pretty strong ever since. Okay, so we've got MACD signal line coming out of the histogram. We know the moving averages are getting closer and closer together. I'm not concerned about the stochastic here because that could easily spin around at this level and go up. It does that quite often, actually. You can see here, even here at these points here, that's when the big markets take off. So I'm not concerned about that at all. But the MACD is important here. We've got a big indecision candle right at the 20 moving average. The 20 moving average has pulled it up. It gave it support all the way up, and now it's going to provide a level of resistance. We've got resistance right through here anyway as well, so it's got a reason to stop here. The between 1800 and 1810 is a pretty decent area for it. So for this one, it's either going to do one or two things. I don't think it's going to hover here for very long. It's either going to short back down to 1765, or it's going to break above that 1810 level, break above these moving averages, and then start marching on again to 1850, which is the level that you would expect it would get to, which is this whole high conjecture area here. I'll put a horizontal line there to showcase that line. Okay, that's probably that's a little bit high. I'll bring it down a little bit through there. All right, that's the level that we're looking at because of the support that we had through here and all of the resistance. So basically a watch and see. It's right in the middle of the zone that, where it wants to stay. I wouldn't mind either trade. I don't think either of them are really a bad trade, but I think it needs to prove itself. So the next daily candle, if it's below the indecision candle and closes below it, we'll be looking for shorts down to 1765. And if the daily candle closes above this level here, above 1810, it's all important level. It needs to close above there to actually take this trade. Then we're looking at longs to 1850. So I think both trades are definitely viable, but you need the daily candle to close above or below the indecision candle to give us the direction that we're going to get for gold. All right, everyone. So I hope you've had a great week's trading. I think we've had really good opportunities again. I think it's been an awesome couple of months trading-wise. Technical analysis has been right in the front and center of all the market moves. The levels are holding up well, and a lot of the technical plays are working out really well. So hopefully you've been able to catch some of those this week. Have a great weekend, and I look forward to seeing you all next week.